Nice. Well,
Right,
listen, Maddie,
Frankie.
you're going first. We're not going to bury the lead. I mean, that
All right.
Microsoft is so clean, right? I mean, how do you not start there? If there's one that stands
There's no
out,
reason. There's no reason to bury it and save it to the end and all the hey, my last pick is my best pick. No,
I'm
my
debating
first pick is
between
my
this
best
small
pick.
cap gold stock and
Nope.
Microsoft.
Nope. I'm going to do that on my other screen while you're dialing in your second pick there, Frankie. Microsoft, no, it stood out to me today. It stood out to you today. It stood out to Mark today. It stood out to Trader A in Omaha and Trader B in New York City and a bunch of my good friends in Mumbai, India as well. It stood out to everybody. This has been a clean setup in development for the past week following an earnings report that was a really good earnings report. This is the perfection of a secondary pattern when it comes to a post earnings analysis. And so, with all of that said, watch it get faked out next week. But with that one said, let's break it down here for our community. First and foremost, you're triggering above resistance. That's number one.
Yes.
And so you're looking at the concept of confirmation already on Microsoft. Now we're probably going to close above that resistance level, and so any entry going into next week is going to be predicated on either one. You need to see a close if it comes back down today. For example, we still got a good 2.5 hours of trading. It wouldn't surprise us to see a little bit of a fade coming into the close. And so either one, you need to see confirmation next week, or two, we confirm here today, and we're just talking about the entry above the high of the day. Whatever that is, we're looking at a confirmation candle with the entry above whatever that high number is. You come out to a multiple time frame here, Frankie. You are battling a little bit of an old pivot point over here, but there's nothing else there. You break out, you should see a little bit of giddy up and go here as you work outside that pivot. You got a little bit of noise at 320, but nothing until you start working into the
Nothing real,
340
right?
range, right? Old support can act as new resistance, but the only resistance of confirmation here is 340. And so whether you T1 at 320, T2 at 340, you can structure a trade at 320 and still get a really good trade here.
Yep.
And so T1 320, T2 340, like the cleanliness of the breakout here. It's the leader in the space. Stop loss here, Frankie. Again, nine's going to be gauged on any momentum based pattern. High bases fit that bill, a momentum based pattern. And so when you break this down from an intraday perspective, and the reason you do this is you try to find where those levels are that are important to the support equation. And right here, Frankie, it's just been there all week long. 304 is kind of the support level. So any stop loss underneath 304 makes a tremendous amount of sense to me. Position trade, you're probably saying underneath 300, getting it underneath 300. But we're looking at a swing trade here on Microsoft, and again, just one of the cleaner patterns out there in the market. Let's see if we can get some follow through coming into next week. What's your thoughts?
Yes, yes, and yes. 100%. And I agree with your analysis. I think ultimately you are targeting up towards the highs, and maybe looking at that T1 and that 320 ballpark. Nothing really scares me technically between here and there, right? And if it does, well, it's probably looking elsewhere. But I love the setup. It's one of those that this is the type of setup that you can afford to lose, right? Because it makes you money a lot of the time. It's not always right, but it is a good high probability of a profit pattern, in my opinion. Yeah, absolutely. It's a beauty.
Microsoft breakouts are a thing too.
Yes,
Like,
Microsoft
yeah,
breakouts have a tendency
yeah,
to they have a good history of
they have a
paying
good
out.
history. They have a good history. All
Absolutely,
right,
they do.
Frankie, what's your first one, young man?
All right. Well, the reason I didn't fight you too hard on Microsoft is
Mm-hmm.
one, I can have it too, right?
Yeah,
And
we
two,
share. We share.
I
We
saw
share.
I saw that you had Edward Life Sciences on your list, and I was like,
Yeah.
okay, let me. I'll
You
give you
took my
Dan.
round. You took my second round pick. I didn't even say anything. You were just like, I got EW.
Yeah, EW is really impressive to me. I've been keeping an eye on them for a little while, kind of waiting to see this development. They're battling their weekly 200 right now. That's kind of been the top over these last couple of weeks, and so a breakout of
Oh
this
well,
nice
yeah.
clean daily chart gets us through. those averages as well, which is always nice to see, right? I don't want to have to wonder, do I need to worry about the 200 weekly? Because I always answer that with a yes, right? Have I tested it yet? I always have to answer it with a yes. You got a really pretty clear path if you take out this resistance level into 92 for a first target there, or into that $92 range. There was, you have to go back in time a couple of years, but there was a breakout in that $92 range. We've seen a little bit of price action. I think that's kind of where my head is for that first or conservative type of a target. If we can get through, and it is a range, right? If you said 91 or 93, I wouldn't put up much of a fight in that regard, because it is a ballpark. But I think 92 is a fair number to be looking at. And then beyond that, I don't think 98 is unreasonable. In that 97, 98 range. Again, we have some price action there. Going back, it's playing a little bit of catch up in the healthcare conversation. It's holding up better than some of the healthcare stocks have over the last couple of weeks as well. So I think you're just looking at a breakup over these highs over the last couple of weeks. Do think you want to get through it. I don't think you want to front run a breakout at the 200 weekly. I'll never think that. Stop loss wise, I love, assuming this breaks, I love below yesterday's low as the standout stop loss location. That gives me the 9, that gives me the support level that led to the breakout. You could make a case, right? Because there are other ways to do it. We know we're going to be below the breakout channel. You could probably go below today's low. That would get you the 9 as well, right? Doesn't quite get you that today, but it would get you that if and when it broke to the upside. That might be preferable if you're looking in that $92 range as your target too, and trying to play this, a little bit tighter. If you're in, and so you do have some options for the stop loss, I think, but I really like a potential break here. Got a break. It is a tough break. I won't be surprised if it doesn't. Me, Maddie. I always assume that 200 is weekly is a tough cookie to crack, right? So
that's a good assumption here, Frankie. It's grandmama for a reason.
It's a good assumption. But if we do, I like this as a little
more like my grandmama, not yours, Frankie. Like it's tough as nails.
Yeah. It's a tough old bird, right? It's tough. It is tough to get through that, which is why it always catches my attention if it does, right? But you gotta love where it is on the monthly chart. It powered through the 50 last week. You're in the middle of a big pocket. You got the follow through candle thus far on the beginning of the month, and that obviously there's a lot of months left, but a lot of things lining up if this does break that does stand out to me.
I just like it from a multiple time frame perspective. You break the daily and it breaks the weekly, you get a little bit of upward movement in price by that. It's everything we talk about when we talk about multiple time frame analysis. You break the daily. Oftentimes people just live on the daily and they break out of a daily chart and it gets blasted and they don't understand why. It's because they didn't look at the weekly chart to look at where those real levels are of importance are. That's one thing you and I and all the coaches of tactical trading, I mean, that's a creed we live on from a technical perspective, is we check multiple time frame analysis on everything. Looking at intraday levels to trigger in, like in our scouting report, when we release them later on today, there's going to be entry numbers, there's going to be stop loss numbers, there's going to be targets associated. We look at intraday levels, daily levels, weekly levels, monthly levels before we put all that into equation. So EW here, it's got a pretty pure breakout potential here. And unlike talking about Apple or Microsoft, that's upwards towards a high. And my next one's going to be upwards, not my next, but my third one will probably be more upwards towards the high. It's coming from a low point, and it's also breaking through some important stuff before you start working into some open air to play a little bit of catch up there. So I kind of like that about that as well. Frank, I'm going to go with a popular cash flow stock.
Okay.
And specifically a popular cash flow stock at Tackle Trading. I'm going to go with CCJ. That's going to be my second pick.
Okay, good call.
I'm going to go with CCJ. And what I like about CCJ here is, number one, there's a lot of different things you can do with CCJ here, from a naked put perspective to a bull put perspective to just being a little bit aggressive on the top side here. I liked it a lot more earlier today before the oversized power move to the upside.
Sure.
But I still like it here today, even from a directional perspective. And the number one thing I like it from a technical perspective, because again, I think you could easily go to the options market and come out to say 28 days from now, get you a nice little 17 delta contract, sell a naked put right there at 25 strike price, bring you in a little bit of cash flow. It's about an 8, 9%, 10% return, selling that 25 put option. So I certainly think you can do that. But I like it just from the first time we get that snapback retracement, the bull flag coming into the 9, it confirms against support right here, Frankie. And so you come into that old resistance, now a new support level, and you confirm that today with that upward movement in price. Now, Frankie, from an actual, trading perspective, it's ran a little bit here. Now, in a flag, you don't have to target the previous level at 28. You can look a little bit higher than that, and that's what you're going to have to do to justify this trade, Frankie. You're up above the high of the day here on an entry. You're underneath your stop loss, and I think you can probably put your stop loss somewhere around 2660 there, Frankie. You come out to a little bit of a longer time frame. You're in a whole bunch of chop and a whole bunch of noise and a whole bunch of neutrality, but you're starting to break up above that level. And Frankie, it would not surprise me in any capacity to dance the $30 conversation on CCJ in the next couple of weeks. And so I do think 30 is kind of the target number there. Coming back to the daily chart here, discounting that wick right there. Your entry is above the high, stop loss underneath 2660. That's about $1 of risk there for potential $2.40 return. What's your thoughts?
Yeah, I have no issue with it at all. I mean, you wish that it hadn't ran as much, right? If you're not in it, of course. But yeah, if you played that bounce, right, you pull back into the 9 and into that old breakout channel, you probably weren't playing that if you thought that high from a few days ago was the high water mark, right?
Yeah.
You were looking a little bit further back in the chart, likely into that $30, ballpark of resistance. I have no objection. And the great thing is if you're a little bit worried about it, let's just let it cool off there, right? We can see if we do a little bit of a dance at that resistance and play it on the break, right?
Yeah, you can play the breakout at 28.
So it does do that. Or hey, guess what? You could also scale in, right? Go in a little aggressive, add a little if you get it. I like it though. It was one of the few. I had a very small list in my Wednesday scan, Maddie, in the step channel. This was one of the few names I had on that list. I do like this one quite a bit.
Well, in volatility, you want to see, you're not going to see a lot of retracements. This is a pretty clean retracement as well. Mark, you wanted to add something on CCJ?
Yeah, uranium's obviously one of my baby childs. 2 days ago, energy selling off, market selling off. Uranium didn't sell off 2 days ago. Yesterday, market started selling off. Uranium wasn't selling off. It is not surprising at all that on the first update, you see power movement because the last 2 days, volatility died, which is usually a precursor, right, to, a big move. Wow. So uranium price action the last couple of days, very constructive for a move up here.
Nice. Always good. Always good to have that at our side. All right, Maddie. I like it. You got me sold. I'm going to go
different ways to trade it, by the way.
There
bull
are,
calls,
yeah.
You could spread, bull put.
Bull put, yeah. You got lots of options.
A lot of different ways to trade.
Lots of ways you can play it, which is always good, right? Always good.
Ilka's bleeding that 24 naked put already today.
Love it. Love it. Nice. Good man, Ilka. I'm not surprised to hear that. I know Ilka very well. I'm not surprised to hear that at all.
Not surprised at all. No.
Nicely done, young man.
Great job, Ilka.
All right, Maddie. Well, I got a bull and a bear, and I don't want to close off with the bear. So I'm going to throw my bear. I do think we still want to be balanced in this market to one degree or another. Right. With our directional trades. So I'm looking at CF, looking a little breakdown on CF Industries, not participating in the broad market rally here today. As a matter of fact, selling into support as we speak. They have basically nothing below this, Matt, until we get into about 60. At 60, you're going to run into the 200 weekly, the 50 monthly, some old price in that zone, but they are working into a really nice little window here of nothingness, right? I don't think we're trying to get crazy here and go beyond that and asking them to break those levels. I don't think we need to do so, though, to have a pretty good little trading opportunity. So first things first, I think no matter what $60 is the target, right? Is kind of what you're working with. I don't feel comfortable being any more aggressive than that. So that would need to be T2. Pure breakdown mechanics. You could debate, do we go down below today's low, or do we go back to the low of that double wick back in March? I'm going to say that you go to the wick back in March, the double wick back in March. That's going to put us just under $68 from an entry point of view. I know some traders would probably look at it and say, if we take out today's low, let's go. And again, to each their own, as long as they're consistent.
If it's one wick, it's one wick. If there's two, it means something.
It's the two,
different.
and it stands out to me. So I do think you want to kind of take that out. And that's going to put us just below $68. So that gives us a nice $8 room, for a potential target. Stop loss, I think best case right now, because we don't know exactly what this looks like if and when it breaks, right? So right now, I think you kind of are looking at anchoring above today's high, but that can and likely does change depending on how and when it breaks, right? That probably won't be where the stop loss is. But maybe the next 3 days, that's the high intraday 3 times. And all of a sudden that's a standout stop loss location. Again, it's hard to, say for sure where a stop loss is on a potential breakout or breakdown, because you don't know what the candle that looks like, going into that does, right? If I prep the trade right now, and I'm setting my order to get in under 68, I am putting my stop loss above today's high. That is where I would kind of start the bidding. But again, as long as we're above that breakout channel, to each their own.
Frankie, there is some clean breakdowns in this market. That is one of them as well. Got a good little pocket, $8 pocket. I'm glad I certainly agree with your paying for the wicks over there, right? You're saying, okay, I'm not going to get it underneath today. I'm going to get it underneath those wicks over there. That opens it up a little bit. You got an $8 target, which means you got a little bit to play with on the reward to risk ratio as well. Like it, Frankie, we're going to have some decent bear breakdowns on the scouting report later on today. But what we're not going to do is for me to bring one right now, because I'm going to bull. I am 3 bulls for me today.
So 5-1. I won.
Yeah, you were going to win.
I know my brother.
You were going to win. I was going 3 bulls today. I'm looking staples. You got Microsoft and tech, obviously. That was Microsoft. Everybody underdog is going to be on that Microsoft breakout. CCJ is more of a cyclical counter trend in the cyclical type play because of uranium. I want to, if you're going to go 3 bulls, I want to add a defensive bull type environment. So I'm looking staples here, and obviously staples have had a little bit of volatility, but it's holding its own against the 20-period moving average. You look at some of those staples here, and you got, for example, General Mills, good high base breakout in General Mills, looks really good at the top end of the chart. Hershey's is a juggernaut. Nice little secondary high base pattern there. You got Kimberly-Clark here. You got a little breakout pattern here above 145. Just been an absolute juggernaut out there as well. You got Lamb Weston, Frankie, that
just keeps grinding.
We just love Lamb Weston.
Slow
methodical
and grinding.
right? Slow methodical grind on Lamb Weston. You got Church and Dwight out there. Church and Dwight looks really good in a post-secondary pattern as well. And I'm looking at all these staples type plays, these conservative type plays, and they're all tradable, like all of them are. But they're all also very high in the short term, right?
Yeah.
They've all had really good runs in the last 1, 2, 3 month time frames. And so you got to trade momentum there. It is consumer staples, but you got to be trading momentum there. And so all of them can be done. All of them are good. And I am not throwing any cold water on any of them because they are all look pretty good. But none of them are my pick here for my last pick for Frank's charts here.
Ooh, all right.
I'm going to go with Dollar Tree.
Oh,
little cheap retail here. Now, the reason I chose Dollar Tree is more of the catch-up trade, more of a,
sure,
get a little bit of momentum, catch up to the leadership, that type of mentality. And the reason I like it there, Frank, is I come out to the weekly chart here, And we're just claiming a whole bunch of other overhead resistance there between 150 and really kind of the 153 level. You're now breaking back up above almost everything on that weekly chart. You look at the monthly chart, you're breaking back up a bit above everything. You never really broke anything on that. You come over to the daily chart, you found the 9 and the 20. Now you're breaking up above that as well. So I just like a little bit of a catch-up trade here on Dollar Tree. And again, it's nothing against any of those other ones because I'm willing to bet probably 2 of them, if I had to say, would make the scouting reports, the final list on the scouting reports. But again, we'll see what all the coaches have to say about all the potential picks out there. We're going to have a fairly decent bull watch list this week. Relatively few on the bear side of it because of the volatility and some of what's happened at the bottom areas of the market. But there's going to be some really good trades on both sides of the ledger, and I'm sure some of the staples will make that. I just think you got a very simple trade, a little bit of catch-up trade, targeting really kind of ultimately working into 170 here, Frankie. Any stop loss for me has to start underneath the pivot point right there. So you're taking a little bit of risk between that 156 trigger, most likely. Stop loss got to be underneath 151.5. You can be a little bit more aggressive on the management if we get a little bit love here over the next couple of days, utilizing the 90 EMA as the management guide. But again, just looking at this on a weekly chart, just targeting kind of working into these highs right around the 165, ultimately working into 170 here, Frankie. Just looking for some catch up on some.
I could see why.
Breakout.
I could see why. I don't think there's anything wrong with looking at it from that point of view. Very clean on the break. Got a nice little window to work with. Like you said, there's a lot of options in staples, and your personal preferences. Wanted to
bring something that
look
wasn't
a little
different,
base. Right? Look a little bit different. I've got nothing against that. I like them, and I'm interested in, because there will be a battle of probably half dozen or so.
There's
staples,
about 7,
and there will be 2, maybe 3 on the final list. Probably 3
minimum 2, max 3.
3 or 4 are going to get cut. They're still going to look pretty good. So, but yeah, these guys will be in the ring.
They're in the conversation.
100%.
I do not know if they'll make the final cut.
Hard to tell. Hard to tell, right?
Good stock setting up in staples.
There is, but yeah, it's a good looking breakout. I'm with you there. So I got
what's your last?
So I'm on the last. I've got a 3-pronged bait here. I got Humana. I did Frank's charts on Humana, though. You can catch that over on the Tackle Trading Twitter. Yep, a little bit of a breakout. You can catch that on the Tackle Trading Twitter probably a little bit later this afternoon. So I won't go with them. I've been following very closely MPW, Maddie. This is one, it's a nice dividend payer, and it's been something I've been kind of looking at adding for a little bit more of a position type of trade because of that. And I've been kind of watching that, like $9. But what's cool about this one is there's a window between 9 and 10. So even if it's just a trade, there could be something there. I'll just throw that one out on the radar, but I'm officially going to go, because no one wants to talk about my boring REIT, right, for Frank's chart. So I'm going to go with CSGP, CoStar Group, CSGP, not Microsoft, not a household name, right? So, but a really interesting chart, huge movement on earnings, right? I mean, I don't know how great their earnings were, but the market obviously thought they were great. I mean, that was, we throw around power move a lot. That's a power move, right? So huge move, getting that pullback into that 9 over the last couple of days, finally starting to see some upward movement here today, getting that higher high, higher low. That kind of makes sense why it's kind of stalling there, because, one of the big reasons I use the hourly versus the 30 is because I think the moving averages are stronger on it. That's just my, personal opinion, but that is the primary reason why I prefer the hourly to the 30-minute. And that was kind of kissing into that 50 hourly resistance zone, at least short term, getting through that, especially since we're going to likely not take another run and break through that today. Getting through today's high should be pushing through that early next week. Right. So if this is to go above today's high on Monday, I'm probably getting through that and not overly worried about it any longer. You've got the backdrop of the big earnings. I don't know about, the Fibonacci's, but you got a pretty decent retracement right into that 9. If you were worried about the 200, well, you don't have to be. We're now back above it, so don't have to worry about that. very much an open window until those old highs in that 78 ballpark, right? There's really not a lot of resistance between here and there. Beyond that, you do kind of open up into the 80, 80, 50, 81 range. There is quite a bit of history in that ballpark. I think that's kind of as far as, I'm willing to try to go on this, if I even need to do so. Stop loss, you got two options, really. You can go below today's low if you're playing it tight. You can go below yesterday's low if you're playing, the more of the pivot development, and that would probably come down to your preference. Me, Maddie, I'm more likely to give it more room than less. I'm going to prefer yesterday's low to today's low, but today's low would be at least a reasonable option if I wanted to tighten it up and maybe just try to trade in this window between here and that $78-ish resistance level. But nice little orderly pullback as we had that huge move to the upside. A little bit of a different looking chart than a lot of things that are going on out there, which always I think are good additions to a watch list. If nothing else, get a little bit of different perspective.
You know what stands out to me on this one, Frankie? A standard bullish retracement.
Yeah.
Like, wow.
Yeah.
Like, wow. Like a standard 3-4 day pullback, 50% Fibonacci coming into multiple moving averages. It's almost like we can pretend we're in the real world for a second because we're dealing with standard technical analysis and not just momentum analysis. So that does stand out to me, Frankie. I really like the support build there between the 90 MA and the 200 SMA. You got the slow methodical 200 and you got the aggressive 9, both providing some degree of support there. If you're looking for cheap risk opportunity, bullish retracements are the cheap risk, big return opportunity.
Yep.
They are the biggest reward versus risk ratio you can find in almost any pure technical formation. So they're always going to stand out. Bullish retracements, people love bullish retracements for that reason.
Yep.
They don't have the breakout potential in terms of the probability analysis, but they more than make up for it on the reward to risk ratio.
Yep.
So like it here, Frankie. I can't throw cold water on it at all. It's a really standard bullish retracement. And your entries above your trigger point, stop loss underneath support. Pure trade here. I like it.